Welcome to Trading Lounge and the European indices for the 2nd of March. Now, you're probably not going to like me very much because I'm going to be looking at this in different ways here, but the main point is that this move here is corrective, so we should be making new highs here. So that's the main point here. Yeah, I mean, this move up can be counted in different ways, all of this here. I'm sure there is a right way. Yeah, I just can't put my finger on it. But the main point is that we're seeing corrective moves here, so we should see further high. Also, too, we've had quite a good consolidation under the 14,000 here, so that's really like an accumulation process. So we should really just sort of push up into the 15,000 at this point. We may end up seeing the market come back and test the 14,000. So coming back up and testing it and then pushing up. But I don't sort of see it coming sort of below here much in this regard. You know, I know it has been creeping to the upside in all of these as well, but because we've got that nice double top there, it should offer some nice support at this point. So yeah, look, we can go long pretty much whenever you feel like it, so to speak. This is another way that it could finish off here with wave 4 down here with an A wave, a B wave, and a C wave moving up here higher. So the 4,300, the top of group 1, can also be a position in that space. So let's just cruise in a little bit further. We'll also have a look at this in some detail as well. This is a more optimistic count where we have wave 4 over here and wave 1 here with an ABC for wave 2. And in fact, I've had a bit of a think about that. That can go over to here for that. I'll show that in a different way, but yeah, the ABC here for the A wave, and A, B, and C for the B wave, and down for the C wave here, which is a bit complicated really for a wave 2, so it's probably not the right thing to do, but we've had it here, so we'll just continue to use it. But our main focus really is this little trend here, and with the understanding that we'll be making new highs. So with that in mind, I'll just go to the 100 ticks. And we'll bring in a little bit more data here. Quite a lot of data. So, so yeah, this is a different way to count it. So wave 3 over here in this case, with an ABC here for the A wave, an A wave here, ABC for the B wave, up for the C wave for the B wave, and down for the C wave. So basically an A, B, and C. Nice and complicated for a wave 4. So that's really probably the right sort of move for that, and in that case we can see ourselves moving a little bit higher. So I just want to go in here and have a look at this. This is also a little bit dodgy as well. Some of it I understand. I can see that that's wave 1 here, an A and a B and a C for wave 2. So this wave 2 could also sit over here for this as well. So I'm just going to copy that here. It's something that I'll just need to compare to the cash market and get that sorted out. But we are seeing impulse waves to the upside here. So I was just thinking for the labeling senses of 1 and 2 here, then 1, 2, 3, 4, 5 here for 3, back for 4 here, and then up for 5 here, and then coming back and testing it. So it looks like this little one here is complete in terms of 1 and 2 and 3 and 4. Yes, it could go a little bit higher here, and then come back for wave 4 here in 3 waves, and then push up for wave 5. How far that will push up? Probably the same length as wave 1. Excuse me. And then back for wave 2, checking it here, and then pushing up into that space. So obviously you just really got to keep your stop out of the way, wherever you want to get into all of this. So there's a bit of a trend line through there, so we could pretty much keep it under that for the time being. We just really want to be out of the way at this stage, so keep it well out of the way until this becomes the support. And you know, if that stop is that risk, that exposure is too much here for you, then just use less. Less is more. And then what you want to be looking for is to build up on this side over here. So back on the 14, back on the 10, on this leg here, you know, on the 2 here, and either take profit at the 3 here or wait till we get a classic trading levels pattern there, which you know is the arrival, the reaction, the first high above the level, then the ABC pattern here, and then up at that point. So we'll keep an eye on the S&P because and the Nasdaq, because we will expect those to push up there as well. So that's pretty much it for the DAX. It's a bit of a takeaway here is that we are looking for a bullish trend to move to the upside, and it is normally the little third wave that takes out the trend channel here as well. So all going well in that regard. Okay, let's have a look at the FTSE. Okay, so for the FTSE here, we had sort of two counts here. So we had one with coming down for an A wave here, and then a B wave in 3 waves, and then looking for 5 waves down in here to finish wave 4 here. Okay, but we've had 5 waves in here, and then the move here, and then the move here for this. So it's only got 3 waves here. It's sure it still could be wave 2 here, and then down for 1, back for 2, down for 3, 4, and 5, and we still have the third wave to play out here. But somehow I don't think that's the case. So the alternative count that we also looked at yesterday could be even more interesting now, because that wave E here would finish in 3 waves, so that would be finished there. And that's really looking at, I know it's a little bit weird, but over here is wave 3, an A wave here, the B wave, the C wave, the D wave, and the E wave here. So that could be on the cards here for that. So technically speaking, any move above this wave 2 here would be the catalyst for that trigger at that point. Could you get in a little bit earlier? Yeah, I suppose so. One of the first things that we'd need to look at, though, is that if it was going to go lower, then this is where it would fail at this point here, at the 61.8%. It could go to the 78.6 as well, so that's also something that, it's just the starting point. But here we have group 2 here, so the medium level is 6,500, then 65, 72, and 80 here. So if the market can find support on the 65 with the small classic trading levels pattern, then you could move into that there. So the first high above the level is what you're really looking for at that point. So you could go in long at this point. But I think that what we'll probably see here, looking at all of this, is some sort of move up to here, and then an ABC back again, and then a move up here. But yeah, so it's looking kind of bullish. So if I'll have a little look on the tick chart, see if I can see the count. So that's the low. So we'd have to call that wave 1 with an ABC for wave 2 here. We've got 5 waves here, we've got 5 waves here, and we've got this one's going off to the side here. It's a bit weird, I have to say. But that would be 1 and 2 here, and then 1, 2, 3, 4, pulling back 4 a long way, because it could be 1 and 2, and then 1 and 2 here, pull back 61.8%. So maybe we need to work the 6,600 here. Sorry, just checking on a few other things. So what we could do here, let's just say that this trend up here continues a little bit and then drops back here. Okay, so once it drops back here, then use that high there to go in on, and also build in on the 65 as well. So 1, 2, 3, 4, 5. So if it pulled back, and if we include this one here as wave 1 and 2 here, and all of this is the third wave here, then that would just technically should pull back if I just take it to above the high there, a little bit further up in there. Okay, so that's the 38.2% retracement level. So generally speaking, the market should stay above here. So that means you just need to keep your stop under that at that point. Not right on it, not on a whole number like 40. You need to drop it down to, say, 6526. That should do the trick. Alrighty, yeah, not much I can add to all of that, but let's just go back and have a little look at, where were we with it? Not sure what it was. Yeah, so yeah, it's a wild correction, this one, I have to say. But the good news here is that that we should be pushing up higher from here. We should be taking out these tops. That's really what I've come back to say here. If this is correct and we're ready to go at this point, and that's the thing, you know, when you've been beaten up so badly, you know, in corrections, sideways moves like this here, if that even is the case, then you tend to get a bit tired towards the end, and you tend to miss the breakout that occurs at that point. So this is the point where you really need to get a couple of matchsticks and prop your eyes open and keep an eye on this here. So this could be the breakout that you've been waiting for quite some time. So yeah, just be a little bit mindful of that. Alrighty, thanks for tuning in. Much appreciated. Cheers.